Typically, when new entrepreneurs start business, they have nothing to show. There's no money, there's only an idea, and there are times when they look out for money. The first source of money is what we call 3Fs: friends, family, and fools. These are the first source of funding for any new startup entrepreneur, when the entrepreneur has only an idea to go with. Now, these are the friends, families, and fools are people who only know the entrepreneur. They know him or her personally, and they're willing to bet on them. And typically, the first investors in any venture are these people. Now, they've not even seen the product. It's based on the idea that they are investing. But once that the idea is proven, there is a viable product or a service that the entrepreneur has demonstrated, he needs a little bit more fund to take the business to the next level. And that's where typically angels come in. Angel investors are somebody who come in at the next stage of an entrepreneur's journey to fund him to find the growth that he needs after a minimum product or a viable solution or a service has been demonstrated, to take it to a much larger game. That's how angels invest. As the name suggests, they are people who take a really, really big bet. They don't know the investor really well, personally well, but they like the idea, they like the enthusiasm of entrepreneurs, and maybe they have been entrepreneurs themselves at some point in time, like the entrepreneur that they are trying to fund. So they are able to relate and empathize with the entrepreneur. These are the people who we call angel. Now, the angel round of funding is typically any amount between 50 lakhs to 5 crores in total. And typically each angel invests anywhere between 5 to 25 lakhs in a venture. And the pulled up money is what I mentioned would be anywhere between 50 lakhs to 5 crores typically. Now, there are multiple things that one needs to look at before one can consider being an angel investor. Now, who can be an angel investor? Angel investors can be people who have a wealth event that has happened in their life. Let me define what a wealth event is. A wealth event is when I have bequeathed a large investment, wealth, property from an ancestor. Suddenly I am coming with money that I had no plans for. So then I have surplus that I can put away somewhere, take a little bit higher risk. Second, I have sold a company or a business and I'm sitting on a lot more cash than I need. So I'm financially secure and I have the money that I need further. And that money I can deploy and take some risks. These are some of those people who can be angel investors. Second, I have fulfilled my basic financial needs for my life. And if I create surplus thereafter, some amount of that surplus can go into places where they can be angel investments, can take a higher risk, so to say. Third, and not the least, as an entrepreneur, I'm passionate about helping other entrepreneurs like me make it big in life. And my way of giving back is to help a couple of entrepreneurs with money and with my time, energy, and wisdom. That's the third. So if you fall into any of these three brackets, then you qualify to be an angel investor. Now, things that you are expected to do as an angel investor. As an angel investor, you are not only going to kind of give money, but you're also having to give your time and energy. So it's really not just about writing a check. That's great, but it'll be even better if you can get involved in some sense and help that businessman or that young entrepreneur with your wisdom and your experience in that line. So if you have a guy who has had a great sales career, then as a mentor or as an angel investor, you can help the young entrepreneurs with your gyan on sales, give them great connections so that they can succeed in their business. So that's the other attribute. Now, typically, angels are people who get involved in businesses. And there are 4 things that I think are very, very important for people to remember before they get into being angel investors. The first thing, do not get into angel investing with the idea of making money. It cannot be the singular goal of angel investing. And that's a bad way to start because angel investing is one of the most riskiest investment propositions. 9 out of 10 times you will walk out without making any money at all. So it's important that there is something more to it than just returns that you're in it for. So therefore, what is the other thing? The other thing is you're passionate about entrepreneurship, you're passionate about mentoring youngsters, you're passionate about giving them time, energy, wisdom, and connections that you have. So if you have all these, even if you didn't make money at the end of the day, you had a great ride. So that's very, very important. Second point, it's important to understand that in angel investing, the typical investments that you do goes like this. Out of every 10 angel investments that you do, 4 will do reasonably okay. That is, they will return what you made in the stock market or thereabouts. Really nothing great, nothing too bad, but you've just about made your money. 4 of them will be absolute duds. You will make nothing, you will probably end up losing the capital as well in these investments. So that's going to be bad. It's going to be tough and you never know which 4 in the beginning. So that's really the journey that you will have. And last but not the least, the last 2 will be the ones which really kind of give you the kicker, the big ones. They will give you that 5x or 6x return, which will not only take care of the loss of capital, but overall also give you a much bigger return. Now it's really this kind of a mix that you will have. You will not have all your 10 investments returning you a certain return. That's never going to be possible, especially in angel investing. So as an investor, do you have the mindset to kind of keep this level of diversity of returns and you're comfortable with it? Be very, very careful. Fourth, angel investing rarely goes beyond 4 or 5 years. So your time horizon for investment is anywhere between 2 and 4 years. If the business that you have funded doesn't go back and raise another round of funding within 2 to 4 years, you might as well forget your investments. So it's not really a very long-term investment. It's a very strategic investment, so to say. And fourth, it's just not about giving money. It's about giving your time and your connections. So as an angel investor, if you're there to only give money, I don't think you'll have a great experience. On the contrary, if you're somebody who's also going to get involved with helping the young entrepreneurs make it big, I'm sure your journey will be a lot more richer. So then next time you think about angel investing, look at all these factors, and as angels, I'm sure you'll have a truly flying experience.